Hey guys, welcome back to 90 Seconds with Chris. Today we're going to talk about markets, more specifically the stock market. A market is simply a place where two parties meet to facilitate the exchange of goods and services. These two parties are typically buyers and sellers, and this market could be either in person, face-to-face like a bakery where baked goods are exchanged for money, or virtual like the stock market where securities and IOUs are exchanged for money. Each market typically consists of a buyer who exchanges money or credit for goods and services, or securities. This exchange is typically called a transaction, and the market consists of every transaction for the same specific item that occurs. For instance, the stock market, commonly called the secondary market, consists of every transaction related to stocks or other securities. Back to my bakery example, I raised $10,000 by putting down $2,000 of my money and selling stock at $1,000 per share to 8 different investors. At a later time, the bakery decides to go public, and so we sell shares on the stock market at $1,000 a share to raise $1 million. Keep in mind that since we are now a public company, these shares are sold on the stock market. In this example, two markets exist. The first market is the bakery market, which is in the food market. Here, baked goods are exchanged for money. The second market is the stock market. Here, ownership of the bakery is exchanged from investor to investor for money. In these two different markets, different transactions occur, but still it's just one bakery. For this to make sense to you, go ahead and watch my previous videos on equity, balance sheets, and IPO. I'll see you guys in the next one. Thank you.